Hello, I'm Dimitris Koutsubos from InvestorBlog, and today the subject is about outperformance. The fact is that during the previous 10 years, I have managed to massively outperform the Greek stock market index. And the big question for me is if I can repeat the same thing for the UK stock market in the following years. If I follow the same strategy based on value investing and use the same thinking and the same rules. So there are some facts that make me feel very confident that I'll make it, and there are other things that make me cautious. So in this video, I will explain to you how I managed to outperform the Greek stock market, and then I'll talk about those factors that make me confident and those that make me cautious. So let's start with the Greek story. Here you see a graph that presents the performance of my portfolio compared to the performance of the Greek stock market. And you see that during the previous 10 years, my portfolio has increased its value around 150%. And this doesn't sound something very impressive if we think that the market in this decade behaved very well. But if you compare it with the Greek stock market that tumbled around 55%, then you can see the big difference, and probably you can realize that that was not something very easy. You had a country that lost almost 25% of GDP. A lot of companies went bankrupt. So the average investor in this environment lost more than half of his invested capital. So if a Greek investor has managed to keep his capital, he must be happy. So you can feel that how well I feel that I have managed to increase the value of my portfolio. €1 in my portfolio became around 2.5 euros. The question is how I managed to achieve this thing. And the answer is that I made it through three pillars. The first one is that I was trying to keep the most undervalued stocks in my portfolio. Those stocks that their value was higher than their stock price in the stock market. And you can see some of those choices in some of my articles in InvestorBlog. And I was always trying to recycle these stocks, so my portfolio was always having the most undervalued stocks, those that I was believing that they were more undervalued. The second pillar is that I was balancing my stock and cash position. So when valuations were very low, I was using my cash and I was buying more stocks. And when the valuations were getting higher, I was trimming my positions and I was accumulating some cash. And the third pillar is that I totally avoided Greek banks. If you want to know more about those things and the logic and some details, you can read this article in Seeking Alpha that I write about this story, and I present some more details about the Greek stock market. Okay, so that's the Greek story. Now let's go to the core of the discussion. Why I think that I can make it again. As I said earlier, I'm using the same strategy based on value investing, the same way of thinking, and I'm trying to find the most undervalued stocks. Then, right now in the UK, we have a very negative sentiment that it's similar to what we used to have in Greece some years ago. And this is something very important. Let me explain to you why. In the stock market, you have participants that they are highly motivated, they are seeking for profit, and they are doing intense research. So if they find something that it's undervalued, they're not gonna let it for you. They're gonna buy it, so the price will go up. That's why it's very difficult to find undervalued stocks. But when you have panic coming in, then they become less rational, and they might sell stocks that they are very valuable because they cannot stand holding them. So in this case, it's more possible that you can find undervalued stocks. And it's something that we can see in the UK stock market right now. There are a lot of undervalued stocks, and if you run a screener, you can see a lot of companies with very low valuation multiples. Then something very interesting about the UK stock market is that UK investors tend to overreact. I'll give you an example. It's the opposite of what's happening in Greece. In Greece, if a company announces that its earnings declined 40%, the stock will do nothing, or it might drop 5 or 10%. Here in the UK, if you have such an announcement or a negative guidance through a trading update, then you can see the stock getting hammered by investors 40%, 50% in a week. So my thinking is that UK investors tend to overreact. On the other hand, I admit that investors in the UK are more sophisticated and better informed. So the fear I have is that what I see as an overreaction actually is not an overreaction, but their better assessment of value. So when they are killing a stock is because they believe that the company is gonna go bankrupt, it won't survive, so they do a better assessment than me, and that's a fear for me. Then in Greece, I could find, let's say, 20, 30 names that they were very undervalued. And if you think that there were 200 stocks trading in the Greek stock market, that was a high proportion of the whole market. So I could say there are a lot of undervalued stocks. But here, when I find those 20, 30 names, it's a very small proportion of the UK stock market. So the probabilities that those are the very cheap companies that they are left from other investors is much higher. And if we combine this thing with the previous one, that UK investors are more sophisticated, that creates a fear to me that yes, probably the presence of value traps will be higher. Finally, in Greece, the environment is different. You have a less capitalistic environment, and because you have bureaucracy, there are more barriers to entry. If you have a company that is well established, then it's difficult for a competitor to come in, and that makes companies more stable. Here in the UK, you have more fluctuations. You have companies that they are strong, and then a competitor comes in. So all those changes, I think that they also increase the probabilities of value traps. So I expect to see more value traps, but also I think that because some of the stocks are very heavily hammered, I'll have some huge profits on those. In Greece, the basic skill you should have was patience. You were having a company that was turning around and the stock was doing nothing. So you should wait for months or years. For me, that was a paradise for a value investor. Here in the UK, I feel that the basic skill that an investor should have is cold-headedness, because you have all those ups and downs, and you have to keep calm. Anyway, I feel confident that I will make it again, but who knows? It's something that we will discover together during the following years.